Yo, what's good? Happy Tuesday, Crypto Familia. I got a couple things to go over today with some metamask. We got leverage and pips, difference between exchange trading, leverage and margin trading. And then we're gonna do a little bit of adding coins to metamask as well. So let me go ahead and share my screen with y'all. Hope you guys had a good weekend. Let's see. A couple of things open. All right. Now, if you've never used MetaMask before, you can just kind of, it depends on what you got. If you have a MacBook, you're gonna have to download Chrome if you don't already have it. If you don't have a MacBook, I'm not really sure because I don't have I have a MacBook. But let's see, let's go to Google. I'm gonna type in MetaMask. I already have it up here as an extension, but you can come in here, click it, metamask.io. And then down on here, you can click like download. This is just a wallet I use. You don't have to use it. You can use a different wallet. It's just a very common wallet. A lot of platforms have it. As you can see, well, I don't know why this one won't let me connect, but usually you can click connect and then it'll pop up your wallet. You'll click like approve. But yeah, you can come in here, download the wallet, write down your seed phrase, download it, or you can come in here. Boom. Then you obviously already have it, but you can click download and then it'll be up here. So that's MetaMask. It's a wallet I use pretty frequently, especially like on OpenSea, things like that. If you're getting NFTs, this CroNode I've been using. I've been using MetaMask a lot more, honestly, now that I've been messing with these nodes. But let's see. So we got the setting up MetaMask, which is pretty simple. Grab this for my nose. But how do you add coins? How do you add networks? Now that's going to be a little bit different. So if you go ahead and we'll go to CoinGecko, which I covered in the first video. So CoinGecko is dope. Not only because it's awesome, but there's a lot of stuff on here. But you can come in here, for example, let's say we want to add dot. Now we can come in here, Polkadot network. Where's the chain? Okay, this is a different network, so it's not gonna work. Look like Solana or something. All right, why is this not working? All right, normally there's a hash code. You can go like this. I'll just show you with this one. And you can copy this, right? And then if you want to come in here, now I'm on the CroNodes network. It depends on what you're on, like Ethereum network, things like that. Obviously, each coin is going to be slightly different, but you can come in here. You can click import tokens. Import tokens. Sorry, my Chrome's super slow. Yeah, come on. But normally, yeah, you click import tokens. I think I'm gonna have to open it up in the browser with this. I personally don't like Chrome only because it's super slow, but for the extensions, everything else, it's super convenient. So you can come here and click import token. Why is it not letting me do it? Okay, so normally you can click import tokens. I think it's only this time. All right, there we go. I don't know why it was working. And then you can come over here, copy this, and click it back over here. Now it's going to say I already have it. Come on. You can see token has already been added, but it's going to automatically fill out this area for you. Then you can add custom token, or if you don't know how, go to Google, YouTube it. Sometimes you got to do that. But on top of it too, I mean, the CroNodes network, for example, like say you want to add the CroNodes network. Let's see, we'll go to Google. So you can see CroNodes actually has it on their website. You scroll down, it'll actually tell you. So you can go to settings, which I can kind of walk you through it too. So you can come in here, add network, and then you're going to type in network name. So for example, this one's CroNodes. So I typed in CroNodes, and then it's actually going to walk you right through it. And you can do this pretty much with any coin. You can pretty much do this with any coin. You can come in here, click networks. Obviously, there's multiple different ones. Add network, and then you can see right here for the new RPC URL. Pretty much just going to copy that, paste 25 for chain ID. Type in 25. Currency symbol, CRO, 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 and then blockchain URL. Boom, there it is. Then you're going to click, you're going to click add network or save, and then boom. Now you can actually kind of hop back between networks. If you come over here, you can see there's multiple different networks I've loaded up on here. I honestly, I usually use the majority of the time, I'll use like Polygon, Binance, Ethereum, and CroNodes, to be honest with you. That's the most ones I use. Other than that, I mean, I don't really swap between them quite often. But that's pretty much MetaMask. It's just a kind of a wallet. You know, you go to like, for example, we go to OpenSea. Automatically connect me. You can come in here. You can see show more options, and these are all wallets that you can download. Like I said, you don't have to use, but you can see popular, mobile only, but you can see this one's popular. And it really is, honestly. Like coming over here, NFT, connect, and it's gonna probably pop up like Coinbase and MetaMask. Click next. I actually had to delete it off there because it wasn't connecting earlier. Let's see if it actually fixed that. So now you can see if I wanted to mint it, which that's just an NFT. Let's see. Let's see if it lets me connect that. Show you guys my node. If it lets me connect. A lot of times you can like manually connect it. I tried that earlier, but for some reason it's not happening. Yeah, it actually says connected too. So, so I think it might be a little error on their app. But other than that, that's pretty much setting up MetaMask. When you obviously you're gonna need the 12-word seed phrase. When you get the seed phrase, make sure you write it down, put it somewhere you're not gonna lose it. It's super important. And pretty much what I'm gonna cover today is leverage trading, exchange trading, like what's a pip in the leverage market, things like that. Because this is going to help you when it comes to marking up charts. And I'm actually going to go ahead and get out of Chrome because this puppy is slow. In our last video, we kind of went over what is decentralized, centralized, and then now we're going to go over like leverage trading, margin trading, exchange trading, whatever you want to call it. So exchange trading is different from leverage / margin trading. So it's going to be slightly different. Now, let me show you this. Sorry. So we're going to go to Coinbase. So Coinbase is going to be the example of like not leverage of exchange trading. So you're going to come in here, you fill out your everything, and you can come here, click boom prices, and you can actually buy, come here, buy this. So this will be exchange trading. So you're physically owning the actual asset, right? You're going to come in here, you're going to click trade, you're going to, click buy. And then once you buy it, you then own, whatever amount you buy in the cryptocurrency. Now, when it comes to leverage and margin trading, that's going to be slightly different. So when it comes to that, you're actually going to need a broker. There's multiple different brokers. We go to Google. There's probably a ton of them that are going to pop up. This is one I've used. I've used quite a few of them. I'm not affiliated with any of these. Again, all of this stuff that I'm going over is just for educational purposes. None of this is financial advice. When you take risk means potential loss, could lose money. I just got to make that clear for you guys. Now, when you come on here, you can kind of see $10 minimum deposit, 1 to 500 leverage, minimum lot 0.01, 55 different currencies, 73 different stocks, 38 crypto. So you can come in here and you can actually open up the broker account. And then what you'll need to do is you'll need to go to on your phone. You can go to the App Store. I don't know if it'll show it on here though. You go to the App Store on your phone, get MT4, which is MetaTrader 4. I don't know if this is going to let me. I've never used 5, so I'm not really familiar with it, but it's going to look like this right there. And what you're going to do is you're going to connect your account with this. So once you come in here, you sign in, everything like that. You can create a demo account. Pretty much what a demo account is you're using monopoly money, we'll call it fake money, on the real markets, like the live markets. So you can actually practice, you can learn, you could try these strategies without actually losing money in the market, which is really cool. I always recommend to my team, I'm like, yo guys, until you're winning on a demo account, like there's no reason to go to a live account and just risk it right off the bat. But you can get MetaTrader 4 on your phone. Now there's, like I said, there's a ton of different brokers. This is just one I use personally. You can use Trade Forex, crypto stocks, like I said, 1 to 500 leverage, $10 minimum. Then you can come in here, you can see, okay, let's see exactly what pairs, because Tyler, maybe I want to trade certain pairs, indices, commodities, things like that. Commodities like gold, silver, I think they got oil, you have copper. And you got the US 30, which is just the average of the top 30 stocks, SPX 500, the NAS 100, Germany 30, France 40, whatever. But there's a bunch of them on here. You can come in here, research the broker. A broker is going to be like a bank account. I use Bank of America. Some people might have Chase. Some people might have, whatever. There's a ton of different banks, but Wells Fargo. But do your research. See which one works best for you. Make sure you do a little research so you're not like just throwing some money in this random little account and somebody steals your money. Make sure it's reputable a broker. And once you come in here, like I said, you can create a demo account. You'll go on MetaTrader 4. You will sign in with your Hugo's Way demo account information, and then you could trade from your phone. Now, this would be an example of leverage or margin trading. Now, when it comes to Forex, it's a little bit different, right? So the Forex market is a foreign exchange. Let me go ahead and just delete everything. So the Forex market is short for foreign exchange. Let's say, for example, me and somebody on the call, we go to Cancun, Mexico, right? And we exchange our US dollars for pesos. We will be physically participating in the market. Now, the Forex market is like it's like a $6.4 trillion a day industry. So it's one of the biggest markets out there, flowing constantly 5 days a week, 24/5, closed on the weekends. But this market is pretty much just the exchange for one currency for another. When you have a broker on your phone, you can do it from pretty much anywhere you have access to internet or Wi-Fi, right? So Forex is a little bit more manipulated when it comes to trading because there's a lot more banks, a lot more bigger whales playing in the space. There's not as many in the crypto space just yet. There will be here soon. But when it comes to leverage and margin trading, it's a little bit different. And how so? Let me actually share. New share. We're going to go to the whiteboard here. So we're going to open up this. Now, so leverage. Go over some leverage trading. Now, in leverage trading, so you have lot sizes, you got pips. Now, what is a pip? A pip for a point percentage, but really it's a movement in the market. Now, this is where it gets cool. Now, when you're leverage trading, I personally recommend, this is just what this this is what I do personally. So what you do is up to you, but I risk anywhere between 2 and 4%. So per trade. So let's say we have $100, $100. Well, we'll say we have $1,000 account. So we have $1,000 because can't really do much with 100. So $1,000 account, and we're going to use we're going to call it 3%. 3% risk. So on $1,000, that means we're willing to risk 30 bucks. So we're, so every trade obviously is going to be slightly different, according to your lot size or to your account size, because if you're doing 3% of 1,000, we're just easy numbers, $30, that's 3%. Now, what's cool about leverage trading, right, is now you can choose different lot sizes. So a lot size, there's multiple different ones. You can pick anywhere between. I'm just going to use like 0.01, 0.1, 1.0, 10.0, just for being easy, but you could use like 0.12, 0.17, like 1.23, like you could pick whatever you want. I'm just using this as an easy example. So a 0.01 lot size, which is a micro lot size, that would be 10 cents per movement per pip, right? Per pip. But a pip is really just a movement in the market. So 10 cents per pip. Now we'll do a 0.10 lot size, which equals $1. And then we have a 1.0, right? And like I said, you can pick anywhere in between. Hopefully you guys are getting the idea of what's going on here. Pretty much we're just moving the lot size or the decimal pretty much one spot over. So you got a 0.01 lot size, you move the decimal over once, 10 cents per pip. You got the lot size, right? 0.1 lot size, you move the decimal over $1 per pip. You got a $1 lot or 1.0 lot size, you move it over the decimal over 1, that's $10 per pip. Now, like I said, you could pick something in between, so we'll just do something odd. We'll do like a 1.27. Now that's going to be 12. I always put the dollar sign after for some reason. So $12.70. Now, let's say, guys, we catch, let's say we'll call it 50 pips. Not crazy. It's a good trade. 50 pips is a good trade, but it's nothing major, especially in the crypto world. Forex, it might be a good trade, but crypto world, it's not too much. So let me move this up a little bit. So let's say we catch 50 pips, right? 0.01 lot. So 0.01 lot size. We'll just leave it like that. Lot size. So let's say we catch 50 pips, aka 50 movements in the market. So that would be 10 cents per pip. So we have a total of $5. Oops. Now let's say we got the 0.10 lot size. That is going to be $50. Now let's say we got that 1.0. Now we're getting crazy, right? Count's growing. We got $500. And let's do our crazy one. So we got a 1.27 lot size. Oops, I don't know, you guys can't see that. Can I make this bigger? Sweet. Oh, come on now. For real? Oh, whatever. I have to like this. So that is equal to, so I don't know what that is, to be honest with you. I'm not a math genius here. So we have $12.70 times 50 pips. Let's get in my box. I'll put it over here. Now, same 50 pips. Now let's say we have you got a lot of money, right? Now you got to understand too, this can sway in the opposite way. And this is why we only risk 3%. Well, I only personally risk 3% per trade. Now, let's say we have a $10 lot size. Now it's gonna be $100 per movement. That's gonna be what, 5K right there. So guys, trading, especially in the market, is especially in the the leverage market, forex market, crypto market, when you're leverage trading, margin trading, it's the same 50 pips that makes you $5, that makes you 5K, makes you 50 million. You got to keep that in mind. And it's the art is our trading is the art of catching pips, especially margin trading, right? When it comes to stock, it's a little bit different. You always want it to go up, but in the forex market, it doesn't matter, or leverage trading, it doesn't matter whether it's going up or down. If it goes down, we sell. If it goes up, we buy. Same concept, right? So if you buy it with a 0.01 lot size and you catch 50 pips in the right, you buy it, it goes up, you catch 50 pips. Guess what? Boom, you got the 0.01 lot size, $5. Now say you're using that $10 lot size, or 10.0 lot size, which is $100 per movement. So we got 5K, that same 50 pips, guys. You enter in, boom, buy, it goes up. Guess what? Boom, hit your 50 pips, you made 5K. So it's the same $5, same 50 pips that makes you $5, that makes you 50K, 5K, 500K. You have to keep that in mind, because trading is extremely emotional. And a lot of people miss that, right? I can sit here and teach you how to trade, how to set up a trading plan here in like 10 minutes. But when I'm not here to direct you or direct your emotion to your thinking, now that's when the hard part of trading sets in, is because trading is emotional, right? You enter a trade, let's say you enter this $10 lot size, and you're gonna want to only risk 3%. So what? I don't even know what that is. 5,000 would be 3% of what, 500,000? I don't know. Okay. What's it? 175. So it's like I think it's like 165,000. So I wouldn't trade this lot unless I had like $165,000 lot size, or account size. Yeah, so pretty much like 165,000. So if you have 165,000, you could be trading the $10 lot size. Otherwise, I don't recommend it. Now, when it comes to the broker, right, they only allow you to leverage 1 to 500. So you wouldn't even be able to, you say you have $100 account or $1,000 account, they're probably most likely not even gonna let you do this. It's $100 per pip. You lose 10 pips, you just blew your account. Now, what's cool about leverage trading, margin trading, is you can set it and forget it, right? Let me change my share screen and I can kind of show you again. Desktop, share, boom. So what I mean by that is, once you enter a trade, and this is where I actually have it written down here somewhere. I used it last call. Here it is. So there's 4 major rules when it comes to leverage trading, margin trading. The first one's going to be patience, guys. The reason patience is because if you're rushing things, you're most likely guessing. When you're guessing, you're gambling. If you want to gamble, go to the gas station, buy a lottery ticket. Like, this isn't the place to gamble, guys. I can promise you that. Treat it like a hobby, treat it like it's gambling, and you will get paid like it's gambling, and it will cost like a hobby. So we want to take it serious, treat it like a business. But the number 1 rule, guys, is patience. Now, the reason patience is because you got to see, look, so this happened January 13th, 2022, so the beginning of the year, and this is almost a whole month later, right? Like from the 13th to the 10th. So that's almost a whole month later. Now, in order for you to enter this, right, you see that it's a downtrend. Maybe even if we go to, I knew that was going to happen. If you go to the daytime, let me move this out the way so we can go to the day, and I guarantee you we can extend it all the way up. Check it out. And actually move it just ever so slightly. So you can see, right, and even here, so we could have had this trend started. So usually you want 2 points on the trend, or I guess 4. So you have the right, the high, a low, a lower high, a lower low, and then boom, right? You just want to have it hit it, and that's pretty much your main points. Once you have that, you have a valid trend line. Now, once we set it here, right? So you could have had this set up since it would have taken you from the 29th of October of last year, pretty much until February 10th of this year, until you actually got an entry based off of this markup. Now you could have had a lot of other things written on here, right? We could have put like a floor or ceiling, aka support and resistance right there. See, right, breakthrough, retest, a lot of struggle, breakthrough, retest, struggle, boom, hit the trend line, breakthrough, retest, and it's on this zone. So honestly, what I would be expecting here is for it to, and we'll actually go down to here a little bit closer so we can see where it is. Honestly, I would like to see maybe like a retest of probably roughly like, and yeah, I'll probably say right here. So honestly, like this zone, I would like to see this zone retested for an entry for a sell. Now, I was telling you guys you can make money in the way up or the way down. Now, this is the Australian dollar versus the US dollar. You can see right there, Australian dollar versus the US dollar. So if it goes up, the US dollar is losing strength. If it goes down, the US dollar is increasing in strength. Now, same thing with AUD USD. If the well, on the flip side, right? If it's going up, AUD is increasing in price. If it goes down, it is losing value. So, did not mean to do that. So what's really cool, I mean, it's not cool to think about it in this aspect, but what's awesome in the leverage or margin world, right, of investing is the fact that say the US dollar or the economy is going down. You know what I'm going to do? I'm going to buy AUD USD. Boom, buy it. Look for an entry for a buy. I'm not just going to blindly buy it. I'm going to look for a zone. I'm going to do my technicals. I'm going to look at some Forex Factory. Now, if you're trading Forex, you can come to forexfactory.com. You can come in here, you can see, so where's it at? So here's the next news release, JPY. You click on the folder. Actually, I think you hover over it. Oh no, it's this folder here. I haven't been on this website in a while, but it'll actually break down. And this is a good website to come to if you want to learn stuff. You don't really have to watch the news, see what's happening in the world. You can literally come here and see when major news is being released. You can see this Japanese news. It's hitting at 11:30, so here in about what 3 hours. So, and you can see source, latest release, measures, what territory, industry, activity, M/M. So what it measures is the change in total value of services purchased by businesses. So it says usual effect. If the actual is greater than the forecast, it is good for the currency. So you can see up here, it says actual, and then here's our forecast. So it says if the actual, so if what comes out at 11:30 is greater than what was forecasted, so let's say it was 0.4, that's good for the currency, right? It's the usual effect. Now it doesn't necessarily mean that, and you can see we're on the Japanese yen news, JPY. The next release, you can see why traders care, and this is, like I said, it's really cool. You can come here, see the history. When was the last one? January 16, 2022. Forecast actual looks like it was way below. I bet when that happened, and this is cool too. So we can come on here. So what, January 16th, we'll come to USD JPY. January 16th. Oh, I knew it. Slick dogs. Come in here, see. So January 16th. Now it's going to be at 11 p.m. This is what's really cool about the news. You can come back and see exactly what happened when that news was released. So the next time when it comes, you can kind of prepare for it, right? Where's the 16th? All right, so 11:30. So what? 12:24, correct? So you can see news was pretty much released like right here. And when that news was released, you can see what happened, right? The price kind of played around, went up, and this is what, January, the next day, almost the 18th, until something actually happened. Now this isn't always the case. There's multiple different pairs. So we just type in JPY, you can see literally JPY USD. So it's pretty much backwards. JP or actually GBP JPY, GBP JPY. And you can see you can come back and do the same thing. Okay, well, let's see what happened when these pairs lined up. This is what's cool with the Forex market because you can compare the currencies. You can look at them, see how they're moving against each other. Oh my goodness. Here's some old markups. You can see how big these trend lines are, how big some of these trends are sometimes. And the crazy thing is this happens all the time. You can see I've marked this up, but look how many times these lines were hit. 1, 2, 3, 4, 5, 6. Probably right there, but we won't count it. 7, 8, 9, whatever. Almost 10, 11. Played around, boom. And it's crazy because we can keep going back, and I guarantee the same thing's going to happen. Keep going back, same thing's going to keep happening. And these zones keep getting hit all the time, guys. This isn't like something new. The market moves based off patterns. There's actually something called a harmonic pattern. And pretty much what that is it's harmonics are used by pretty much all professional traders. Harmonics are a little bit harder to do, especially if you're not, it's way advanced. Like here's where I'm at teaching you guys right now. And here's like, we can't even see where harmonics are at the moment. But what I'm showing you guys is very beneficial because you can use these things all the time. This is like the basic foundation, right? This is the concrete foundation in order to, enter trades. You got to know, hey, is this a downtrend or uptrend? Is this a major zone, major resistance, small resistance? And I really want to go into leverage trading. I know it doesn't really have much to do with crypto just a second, but when you get a broker, for example, like Hugo's Way, and you can trade 38 different cryptos. So we can come over here. Let's see, Tyler, which cryptos can you trade with Hugo's Way? I'm just curious. You can come in here, look, Bitcoin, USD, XRP, Litecoin, Dash, Ethereum, EOS. Not sure what that is. I know they have Tezos. There's a couple more in here too. Obviously, there's 38. These are probably just the main ones. I don't know if there's a spot where it shows all of them. I've never, searched for it, but you can come in here. And the reason this is cool, guys, is because all this stuff I'm showing you in the Forex market, you can use in any other market. Just about, right? Maybe not the stock market. Maybe you can. Like I said, I'm not really familiar with the stock market as much. But you can use this, for example, let's pull up Bitcoin USD. We're using it, guys. Actually, it's not even Bitcoin I usually use, is it? Oh yeah, we're just back there a little bit. Same thing, same concepts, guys. Support, you see like literally the same zone. Let me delete this. I think this was from last time we were on here. Right, I'm looking right here. I'm not even looking over here. You can see, boom. Guess what? Played in that zone. We can even move it up a little bit. And this is where you want to back test and see, okay, like Tyler, am I going to put it at the wicks, or am I supposed to put it at the wicks, like all the way like right here? Or am I supposed to put it like at the base of the candle? Now that's up to you. There's no wrong way to do this. You just have to see what strategy works for you, how you plan on marking it up consistently, and you have to do it over and over and see how that plays out. I can't tell you how to do something. I mean, I can show you how I do it, but I can't necessarily be like, hey, do this and this is how it's done. This is the only way. There's multiple different ways. There's multiple different strategies. Let me go ahead and zoom this out. Now I kind of want to go over to the Fibonacci. Now I know we kind of went over last time how to use it just slightly, right? Now let me go like this. Now let's use it on a market, right? It's downtrending. Now this is cool, right? Now what is this? 2017, 2018? Yeah, so the beginning of 2018, right? Bitcoin pretty much went down, and you can see that. So and this is where everybody was at. So we went on all the way up to about 20K, and then went all the way down. Oh, 20K. 20,000, yeah. Oh yeah, okay, this is 1,800, my bad. So yeah, all the way from 20K, right? That was its all-time high at the moment. From 20K all the way down back to 3,000. Now people are like, oh my God, panic, fear, all that. Now, this is where it gets cool, guys, because now exchange trading, I wouldn't recommend withdrawing it because there's things that happen along with that, tax reasons. But what I would recommend is swapping it to a stable coin. So taking, you go to Coinbase, you have, Bitcoin, and then you swap it from that to, let's say, like a USDC. They have that on here. Yep. So like a stable coin, which is meant to stay exactly at $1. So you can take it, move it over, and in the meantime, while it's down, whatever, we can, we can just wait it out, find a coin that's going to go up, maybe a gaming project, a metaverse coin, while Bitcoin is going down. And in the leverage world, when it goes down, we can make money on the way down. We don't even care whether it's going up, down, sideways. We're gonna make money. Now, let me go like this. So let's say this was, the first drop you see, like, oh my God, Tyler, look at this market, it's going crazy. We can even say like right here if you want. So now what we would have seen, so here's the 100% of the move from this bottom to this high, actually, all the way down to the bottom of the wick. So you can see, and guys, this is where the strong trends come in from playing up here. Now, this is normal. This would be a weak trend, right? And these are going to be strong trends when it resists off these 38.2 and 28.6 fib zones. Now, when that does that, you're going to be looking for a stronger trend. Now, in this case, we're going down, right? The market is trending down, kind of showing you guys how we can use this to make money. So it's going down. And guess what? Okay, so going down, going down, going down. Guess what? Here it is. Strong trend, right? Respects are 38.2. It broke a little bit above, but depends on how you mark it up. If you were marking the bottoms, might have just whipped and hit it. Now this is where you got to back test and see what works for you guys. Are you gonna you really have to be consistent when it comes to this. You have to do it over and over again, and practice and back test. But we're in 2017 right now. I'm showing you guys how this works. I want to show you that it does work, so you guys can use it in the meantime. So you can see now our normal zone would have been right here. And here's all of our sellers, right? So in order to break above there, we got to get rid of the sellers. So normal trend. So you can come here, see, guess what, Tyler? Market comes down. Now when it's way back up, retracing, right? Comes back, hits 23%, hits the 38.2%, has some resistance, comes down, comes back up. Almost pretty much respects that area. Not necessarily that exact line, but that area respects that 38.2 and comes back down, continues to go down. Now, let me actually go on a smaller time frame too. Come on, load. I don't think it's coming, but all right. So this out again. You can come here, test it off there, strong zone. Now I'm going to go ahead and delete this one. I'm going to keep these lines and everything there for you though, so you can look at them. Now market comes uptrend, small uptrend. Now when you're on a smaller time frame, you can see that, hey, yo, this is actually a little bit different. You can see retested the same area, 38.2. Here's our normal zone. That's normal. We got our strong trends, right? Come down here, respected it, went up. Now it didn't break through our area, which is okay. I'm not sure if this is fine. Just do that. This. So you can come in here, you can see this is a strong zone, right? Came in here, retested it strong. Usually, right? Now, this is where the market doesn't care who your dad is, who you are, where you came from, what your background is. Let me put my computer on before it dies. The market doesn't care. And now if you're guessing, this is where we come back to, if you're guessing, you're gambling. If you're guessing, you're gambling. You're trying to predict the market. What we're doing is we're reading the market. We're seeing how it plays. So we mark it up, and this isn't rule number one. It comes back to rule number one. Where did I put the little card? Rule number one, patience, guys. And rule number two would be risk management. Sorry, I kind of strayed away from this earlier. Rule number two would be risk management. We have rule number three, emotional intelligence. Now, the reason we have risk management is, so I don't know if it'll still keep it up. Cool. So we had our little drawing right here, right? Here's our risk management. The reason why we want to have proper risk is because, and I'll kind of go back into that. I know I'm hopping around a little bit, but we have risk management. So rule number one, patience, risk management. Now, risk management is important because in baseball, right, in Major League Baseball, the MLB, the batting average, and actually, let me look it up. I'll do it really quick. (2021). So well, that's just one person specifically. Okay, so for the whole year it was 244, meaning like a little over 2 out of 10 times they were getting on base, and a little under 7.5 times they were getting out. 10 out of 10 times. So we're gonna call it. We'll even call it 300%, guys. We'll say it was 300%. So let me go back to the whiteboard. Okay. So we're gonna call it 0.300. Now this is a little bit more than what it says, but I just want to use this as an example. Now, in the Major League of Baseball, guys, the batting average is 300, right? Meaning 3 times out of 10 they get on base, 7 times out of 10 they're getting out. Now, in the trading world, investing it will specifically leverage and margin trading. You can do the same thing. Now you're gonna be like, Tyler, what do you mean, bro? Like I lose 7 trades, bro. I'm losing, right? No. So when you only risk 3%, okay, so 3%, let's say, so we're risking 3% per trade, and we lose our 7 trades. Now 7 times 3, we're looking at 21%. Now this isn't including the fact that we're actually losing money. We're not, calculating the exact percent. It's just 3% total. So we're down to 21%. Okay. Now when I win, I'm looking to win at least 10% per trade. So minimum, right? That's minimum. So once I hit 10%, now what I do is once I enter the trade is I'm moving my stop loss up, right? I'm moving it up, moving up, because I don't want to lose. Once my trade's in profit, I don't lose. I move it up. Your stop profit or stop loss turns to a stop profit. Now it's risk free. You don't have to worry about it. And that kind of goes back to where I was saying, you set it and forget it. Once you put your stop loss on for 3%, you have a take profit. Most of the time, some people do. I personally don't. I just move my stop loss, stop profit, stop loss, stop profit, profit, and I just keep following the trade. I just keep trailing it slightly, right? So now let's say we have our 10 trades. Now we lose 7 of them, and we win 3. Now let's say we just got our 10%, right? Oh, goodness. Can't type right. And even if the bare minimum just to break even would have been our set, we'll just 7%. If we made 7% per 3 trades, we would have been back at 21%. But now we're at 30%. So what does that mean? So we're looking at a total of 9% out of 10 trades. Does that make, hopefully that makes sense for you guys. But I mean, look, we're up 9% on losing 7 trades. And this is where it comes back to, you guys, major league players, they literally get out 7 out of 10 times and they make millions of dollars. Same concept can happen here, guys, but you need to follow proper risk management. And that's super important. So we have patience, risk management, emotional intelligence. Now, emotional intelligence is important because this is an emotional game. And that's really all it is, guys. It's a game. Now, when you see yourself down, right, you're risking your 3%, you got to understand, don't look at this in money. Look at it in numbers, percents. Don't look at it as money. So, say you're down 20 bucks, right? So you have $1,000, you're down 20 bucks, but you're risking $30, right? Which is 3%. You're only down 2%. you're willing to lose 3%. So why are you even tripping? Out of 10 trades, you're gonna make 9% if you own, if this is what you do, right? Obviously, the better you get, the more you're gonna win. But guys, you follow the proper risk management. You have the right emotional intelligence. You have the patience to wait for the trade. It just makes everything easier. So the last rule, number 4, is I always say don't be a chicken, but don't be straight up. Don't be a bitch. Stop. You either win by hitting your stop profit or take profit, whichever you choose, or you lose from hitting your stop loss. Because if you're pulling it out before then, you're most likely over leveraging, right? You see, oh my God, I'm down $50. Like, oh my God, like what the heck? Like so you pull it out. Well, guess what? You just lost 5%. Because guess what? You were over leveraging. And guess what? You pulled it out. And now guess what? The market probably went right back up. It happens all the time, guys. I've been doing this for a little over 5 years. I've seen it. It's happened to me so many times, countless times. I've lost money where I'm like, yo, bro, like what the fuck? Like I was right, but like I pulled my trade out because I was over leveraging, because I was tripping because of my emotions. I wasn't controlling them. I wasn't being patient, and I was being a bitch. And I wasn't like, yo, bro, Tyler, wait, look, you got the proper risk management. You put your stop loss in. You either lose or you win. It's 50-50. But we got our technical analysis on top of it. So let me go ahead and go back to the charts, guys, because I want to show you guys how it actually works too. I only got about 8 more minutes exactly, so I'm going to kind of try to go over this a little quick. Let's go back here. So let me go back to here, Bitcoin, right? So we're looking at this. So that way. So how do we use it? I wish I would. Let me see if I can come back. No, stamp page. Come on. I want to show you guys on a smaller time frame. It's a little bit easier for me to show you. So you're gonna be able to see the exact moves. But I mean, even starting here, guys, we can start from all the way over here. So let's click this, and we're gonna pull the fibs up. So pull the fibs up. So from our bottom to our top, here's our normal zone. We're usually looking for it to reverse and continue up. Then we have the buyer sit, last level defense. And we got our strong zones, right? Strong. Now, boom, guess what? Hit it. Okay, comes up. I'm gonna go ahead and say, here we go. We'll use this as the new bottom, right? So new bottom right here. All this up top. You can't even see the other side yet, so we'll see what's happening. All right, so guess what? We're measuring this part of the trade, right? So anything after we measure it, that's what we're looking for. So we have our normal zone. We have last level of defense. And then we have our strong areas, guys. So you can see it came down, broke through our 23.6%. It respected, came boom, hit, almost came down, hit it one more time, and took off. So you can see it came up. Now we're going to delete this. You can see. So now we're going to go ahead and use this as the bottom. And let me see if that candle went all the way down. See, it did not. So we're going to use that there to the top here. We have our strong trends. We have our last level defense, last level defense. We have our normal zone. And we have our, and we'll mark it like this. We have our strong trend, strong area, right? Same thing, come over here. We can use this as our new bottom. Because it's right there, we got a zone there, a line, I guess. Up. 14K, we're gonna measure it. Here is our normal zone. And guys, we're reading the markets. Remember, we're not guessing like, oh, I hope it comes down to here, or I hope it, hope it comes up. We're literally waiting. Okay, guess what? Retested. It's what do we call it? Respecting, I couldn't think of the word. So it's respecting our zone of 38.2, right? Came down, respected, respected. And that third one is probably where I personally would have bought. The second one even I probably would have bought. Boom, enter, you're up, put stop profit in, you're in profit, doesn't matter, no matter if it goes down now or up, you win. Boom, comes over, up, comes down, hit your stop profit, hit again, re-enter, boom, ride it up. So same thing, we measured it from the bottom to the top, that's 100% our move. We have our last level of defense, last level of defense. We got our strong zone. And we already marked the normal, right? So normal came through, broke through just slightly, just a little bit. And actually, just a little bit, boom. And I always go from the wicks, guys, from the lowest candle. So the body of the candle, not just the wick. So I think there was an example just over here a second ago. Yep. So you can see right here, see the wick came down, but I didn't use that. I used the lowest candle, and actually I can slightly move that too. So I used the lowest candle wick. So that candle actually came all the way down to right here, which is lower than this candle went. It didn't close out there, right? It went down here to one point, but it closed up here. This one actually closed right here. So I'm going to use that wick of that candle. And then you can see that it's actually going to slightly move our zones just a little bit, not too much. We can come in here and, you know, fix them, but not too concerned about that at the moment. Now, guess what? We can do it again right here. Bottom of the candle wick, top. Now it comes down. That. Do this. That. Get out of our way. Now this one didn't really work out, guys, right? So and it does, sometimes it doesn't. That's okay. So we have our last level defense. Last level defense. We have our normal zone, which it came in at first, respected, came up, which I mean, you probably would have hit your stop profit if you entered based off of this. So you enter, stop profited out, boom, breaks through, comes through, hits your last level of defense, breaks through. I mean, that should tell you, yo, we're probably looking for a downtrend. And actually, once it does that, I mean, you could even once it would have broke through here, I would have been like, okay, well, maybe it's, you know, maybe we're a little downtrend. So let me delete this. So you can see right here, right, strong trends, but didn't stop there. So we're going to delete that really quick. Delete that really quick. Delete, right, go through our last level of defense. So now guess what? It's going down, downtrending. So we can start from the top, go the direction of the candle. We can come right here to here. Now we have our normal zone. And guys, you can do this time and time again. I only have about 2 minutes here. At least I'm trying to go through this quick. Last level of defense. Last level of defense. Because we can enter on the way down, guys, right? This is leverage trading. We got our strong trends. And guess what? Boom. Came up perfectly. Pretty much tapped our 50%, wrote it down. And guys, you can do this time and time again. You want to come here, back test your strategies, make sure they're working. Try that. We'll do one more right here. So right there, top of the candle, broke through. It's not really, it's kind of stagnant, but through, retest, broke through, came down, hit our last level of defense, came up a little bit, played around in our 50% zone again, came around. It was pretty much just consolidated, nothing crazy there. Most likely you might have either hit stop profit, stop loss, lost your 3%, whatever. But hopefully you guys found this valuable. I'm gonna go ahead and upload this recording here to YouTube. I hope you guys have an awesome Tuesday. Let's crush it and let's stay consistent, family, and these bags will come. Have an awesome rest of the night. Peace out, guys.